right. Okay, so we have a lot to talk about. Does anybody have any questions before we get started with this weekly webinar and with this all the setups that I think are going to be semi-important going into this coming week and some of what we have going on. So if you have any questions, any comments, just shoot them right on over. If I can't get to them immediately, I will see it and get to it as quick as I can. Okay, so a quick little look. It's Monday. We're right at the start of the week. We've seen a little bit of news so far. Nothing too much on Sundays. You guys know I don't trade Monday mornings because usually not too much happens on a Monday morning, but there is always possibilities for that. And so this Monday morning, we did see pending home sales, which came out a little bit worse, well, quite a bit worse than expected, actually. And then we had some news from Australia, and this is where we're seeing a bit of a spike on the Aussie dollar. We're going to talk about that. A little bit of news out of the central bank in Australia. Going into tomorrow, we have a bunch of U.S. announcements and some Canadian announcements. Tomorrow's a heavy news day for the U.S. Wednesday's a heavy news day as well. We have ADP, core CPI, followed up with the almighty FOMC statement. That's always kind of a big deal. So we've got that on Wednesday. Wednesday is just a huge day, you can see. Then we have interest rates from New Zealand, some Aussie news, some Japanese news, and then Thursday we have some U.S. news, CAD news, Aussie news. Friday we have some U.S. and some U.K. news. So it's going to be a pretty heavy week as far as news goes. But remember, whenever we have FOMC stuff, that's kind of a big deal, and that is coming this Wednesday. So there's going to be some anticipation there, and there's probably going to be some pretty serious volatility during that time. So just be ready for that. And again, that's on Wednesday. All right, let's get down to the charts. Here are some interesting things. Tom and I were just briefly chatting about this for a moment, a half hour, an hour ago, about the fact that we're seeing some interesting things happening in the way of technicals versus fundamentals and how they actually, I've been preaching this for a long time, and I really think that these things work together so fantastically well. The fundamentals and the technicals really play out in a fantastic way together. Let's just take quickly, I'm just going to go back historically here for a moment. Let's go back to this example right here. The euro, this is July right here. This is July, and you can see that the euro had gotten to the yearly low and had been bouncing on the yearly low. It hit it a couple of times right here. Let me make sure my numbers are right. Okay, that is the yearly low. Okay, so the low for all of 2013. The euro had bounced around here a little bit in May and March and April, and bounced around, and it came back, and it kind of tested that level again in May. And so we actually started getting this really fantastic double bottom, and I thought, maybe this thing's going to break. This is a pretty significant level. Maybe it's going to break. And it just so happens that we get a bounce off this of 445 pips on the euro in one day, which is a pretty big move for the euro. We wouldn't be so surprised to see something like that happen on, say, the pound yen or one of those other pairs that can move pretty quickly and pretty crazily. But we see this huge move right there off of a perfectly strong held double bottom yearly low, and this is when the Fed came out and said we're not as gung-ho about tapering as we thought we might be, and so you see the dollar just sell off like crazy, and this perfect technical level right here holds, and then we start to see a nice little trend forming from there. And that's not the first time I've seen that. I know it's not the first time you guys have seen that. It happens quite a bit. Well, now we're getting to this situation where there's a lot of doubt in a couple of different areas. It's very likely that the Fed and that the FOMC statement on Wednesday is going to say that tapering is going to be held off until way into next year, which is sounding like that is almost definitely what they're going to say. And in fact, there are some big money guys that are saying right now that the Fed has got itself in such a situation that it almost can never end the tapering. It's in this like spiral of QE. It's kind of in this spiral of QE, and it's never going to be able to end it. And it's going to have to go on for a long time. And that's kind of a big idea that's going around. And so it's going to be kind of interesting to see how these things come out. especially with the coming news and so on. But when we start to look at the technical levels and the technical setups, we have some pretty good ideas of at least how we should be prepared. So for example, we look at the euro dollar and we see something like this. We see this big channel forming on the monthly chart. And this is, going all the way back to the high of 2008 when the euro double topped at 160 and then just crashed down 3,500 pips. And then it's just kind of been running along this channel. Well, the top of this channel is going to put us at about 139.50. You can see that the euro is just currently below 13800. So this 139.50 used to be a long ways away, but it's not quite as far away as it once was. And it puts us kind of at the top of this channel as well here. You can see that these areas up here start approaching 13900 and so on. So if the euro is to run up to that, we know it's a strong level, but if we get some really, really, really super bearish news out of the FOMC and out of the Fed and all this stuff, then we could really see that level finally break. Because as we look at the monthly chart, this is really a continuation pattern. We have kind of a huge bull flag in the works here on this euro dollar. So we have this big run up and then this consolidation down and this movement here. That is a continuation pattern for this pair to continue up. Now, when we talk about trend lines on monthly charts and weekly charts and so on, these are kind of more into the bounce, less into the breakout. But it still could break, but we're all kind of leaning a little bit more towards the bounce here. Because as we know, this is kind of a big introduction, but I just think this is important to talk about for just a moment. As we all know, last year, early this year, when the euro was up around 137, is when Draghi said, we're getting uncomfortable. We think that the exchange rate needs to reflect more of the core numbers that we look at, and then we see this huge drop on the euro dollar. So we know that in the high 130s, the ECB gets pretty uncomfortable with things, and we're now above 137. We've been above 138. What's been our high lately? About 138.40, 50. So there's a lot of question of, is this going to hold or is this going to break? And we're starting to get to that point where we're expecting the FOMC, the ECB and Draghi specifically to say, the euro's getting a little crazy. Now, as we look at this daily chart and we see this kind of pretty big run up, there hasn't been a ton of retracement. There was this little pullback here. We had this big spike up, and then it kind of just continued, and then some pullback, and then it continued nicely, and then we had a month of sideways, and then a nice run up here. So this is a pretty good steady running trend, but it's also 1, 2, 3, 4, basically 4 solid months into running up here. So we're starting to get into some overbought territory. We're running into some major resistance levels, and we're getting to a point where the ECB might just have to step in and say, we're getting a little bit high, and this is going to really start hurting the bottom line. So hello Tolu, welcome, and welcome anybody else that's just jumped on and joined us. So all of these things taken into account, that is part of the picture. The other part of the picture is we look at our 4-hour chart and we can see all of our weekly pivots, and we know that the euro dollar has a missed weekly pivot from last week that's 150 pips away. And then we have another missed weekly pivot from all the way back to just about a month ago, a little tiny bit, about 5 weeks ago, that is now 450 pips away. And so this euro dollar has a lot of reasons why it should start to turn a little bit bearish. Now, I'm not totally gung-ho about selling the euro dollar yet, but I think we're getting to a very, very delicate point where we're going to start seeing euro dollar, pound dollar, Aussie dollar pairs selling off, and we're going to see a little bit of a dollar rally, and we may see a bit of a yen weakness move, because we've seen a lot of yen news as well. So these are all things that we have to keep an eye on, and we're starting to see a shift in the fundamentals. We're seeing a shift in the news that could be very interesting to see how it plays out. And that's exactly right, Steve. The Fed on this coming Wednesday report, the FOMC statement could be more taper related than anyone's expecting, and that, technically speaking, that would be a perfect move for all of these pairs to start heading down in a huge way. So just keep that all in mind. Okay, so having said all of that, things that I'm looking for on the euro dollar. What do I think might be happening on the euro dollar? A couple of very simple details right here. You can see that I've drawn in, for anybody that has not been with me before in the group, we look heavily at Friday highs and Friday lows. Now we've got a little bit of a, we've had a bit of a run up here, and then we've just seen some consolidation over the last couple of days, and we see this kind of a thing starting to happen on the euro dollar. And this is actually a pretty well supported descending trend line, as well as this little guy right here. Which is telling us that we've got a bit of a wedge forming, and we could see that continuation and that breakout to the upside happen. So at least for the moment, I'm leaning a bit towards a break of this descending trend line and ultimately getting back up above 13800, and I think we're going to be able to do that pretty easily. I think we've got a pretty good chance of the euro dollar running into 138.50, and so I'm going to kind of be looking for opportunities to trade that. But the one thing that I like to do on every pair and everything that we look at is always look at plan A and plan B. So if this descending trend line breaks, I think we've got a nice little run to trade up into 138.50 and possibly 138.80 with stops just below the low of Friday and below the low of this week, which is a perfect double bottom, 137.75. So we're currently 11 pips away from that. If you want to take the chance and just jump in right now because you have such a tight stop, I don't think it's a bad idea. I think we have a nice chance to get a run up into that 138.50. The flip side, of course, is going to be a break of this Friday low and of this weekly low. Now, one reason I don't love this is because I never like to trade a break of a weekly pivot. I don't like that because I think these weekly pivots, sometimes the market will kind of push through them and bounce back a little bit. It's not just like a typical support and resistance level. But I will say that below 137.75 and probably more like the break of 137.70, we do have some nice bearish potential to at least come back and retest this 200 moving average. One thing that the euro dollar has also done that is not super ultra common is the fact that we have now gone 1, 2, 3, 4, 5, 6, 7 full trading days. So not just a regular week, but 7 trading days. So this is like a week and a half. Where the euro dollar has not touched the 200 moving average on the 1 hour chart. So again, these are all signs that lead us towards overbought, exhaustion. We could start to see that pullback happening. So once again, what I will be looking for is break of 137.70 on the low side here, which is our Friday low and our weekly low. And again, that just gives us a few extra pips to make sure we get below that weekly pivot. Or taking that opportunity to trade against this double bottom and target that 13800, which I think is a very realistic possibility and we may see happen. If you want to wait for the break of this descending trend line to kind of get that extra confirmation, that's also a fair idea and not a bad way to go. So remember, that's just kind of a short-term trading idea that I think we'll have over the next several hours. But what we're really looking for is how is the euro dollar going to behave against some of all of this, against all of this upper resistance and all these upper levels here that could really start turning this pair around and bringing it back down. Now, if we look at, again, we don't have a really great opportunity for Fibonacci levels because we've had a bunch of retracement here and there and so on. But if this is kind of our upper level, our 23% fibs all the way down here at about 135.75, and we start breaking below that, and it gets us below this big crucial level of 134.85 and 134.60, and gets us into 134.15. There's a lot of big downside potential here if the euro dollar starts to crumble and starts to come off this upper level. So short-term trades, though, once again, break of 137.70 or break above this descending trend line for a run into that 138.50 and 138.80. We break this level right here, and I'm just going to trade it right down to this missed daily pivot here, which is about, down to the 200 moving average, which is about 137.30-40 area. So a little short-term move on this downside for the moment, but looking for some of that upside movement as well. Okay, any questions, any comments on euro dollar? Questions, comments, anything anybody has on that, just send it on over. Okay, I'm going to move on to the pound dollar here for a moment. Again, getting in line with the fundamentals. If anyone's just logging in or just joining us, we talked about how the fundamentals and the technicals can match up pretty well together. And we're talking about the euro dollar and getting into that uncomfortable area where the ECB can start to step in and say these exchange rates are a bit off. And we're not loving them, kind of a thing, and then we start to see things really turning and running down. And we've had a pretty nice run on the euro dollar lately, and the pound dollar is in the same kind of it's in the same boat, really. If you look at the pound dollar, July we had the low, and of course there's our FOMC meeting, which we saw a big spike of 350, 375 pips, and then it's just kind of continued on up, and then we've started to see some really choppy consolidation for most of September and for a big chunk of October as well. It's been a pretty large range of consolidation, but nonetheless it's still range trading in about a 300 pip channel. The big question on the pound dollar is this a double top? And that's not really a super big question, because obviously it is a double top. But the question is this enough of a double top to stop the pair and start getting some movement to the downside? And that's the big question that traders are really asking themselves right now. We saw some news today earlier. I might have dreamed this. Somebody needs to verify this for me. I've looked at so much news and headlines today that I can't even remember, but I could have sworn that the Bank of England, somebody out of the Bank of England, whoever spoke today, said that it would be ridiculous to raise interest rates in the UK before employment numbers improve significantly. Was that the UK? I feel like that was the UK. Someone verify that for me, but I'm pretty sure that's the news we got out of the UK today. So yeah, there we go. Okay, so they said they need to see employment numbers improve. They're kind of in the same boat as the U.S. The U.S. needs to see employment numbers improve before they can really stand behind the tapering and before they can really talk about raising interest rates and so on. And the U.K. is in the same area. Well, it's funny that the pound dollar has been rallying and rallying and rallying like crazy, and then it's coming up to this major double top, and then we get that kind of news out of the central bank, out of the Bank of England, where they say it's not even a consideration yet to raise rates. And so now we're seeing that happen against a major double top. Now if you look at this weekly chart, I've got a lot of levels drawn in here, but then when we look at the monthly chart, we see this kind of a situation. And this is actually quite a bit more of a different type of a setup than what we have on the euro dollar. We've had this huge run down, and we're really working on a pennant, kind of a reverse, an inverted pennant or a bear flag, where this is just bouncing around, and we're kind of expecting it to come off the bottom of this big descending trend line on the monthly chart, come off of that, run back down to the bottom of this channel, and break. This is an exact continuation pattern to the downside on the large scale here. So, a couple of things that we have to look at here. A few things to take into consideration on the pound dollar is that let's see. Let me get rid of some of these levels so it's not so crowded looking. A couple of things we have to look at on the pound dollars. On the monthly chart, it looks like we might end up with an inverted head and shoulders, or excuse me. I got so many chart patterns going on in my head I can't keep track of them. We might end up with a hanging man candle right here. And those of you that know what a hanging man is, this is a reversal candle. This is telling us this is basically a hammer on the top. And remember, the hammer on the bottom means reversal, most likely to the upside. And when we get this hanging man, or this kind of hammer at the top here, this is telling us that that we're probably going to start to see some major downside and some major reversals going on there. So that's the big picture of the pound dollar. I think the pound dollar is ready to start coming down. Our big levels here have been 162.50 and 163.00, which is kind of the higher point here. And then we had that one little spike up right at the end of the year, which was about 163.80. And so far, we can't really get above 162.50. The only thing I think that's going to get us above that is if the Fed just comes out. The FOMC statement Wednesday is just so much more dovish and downbeat than ever, then that will get this pound up through 162.50 most likely. However, if they don't say anything that's too crazy or unexpected, then I think we're going to have a fantastic selling opportunity on the long term, the big picture, on this pound dollar against 162.50, ultimately 163.00. And if we start looking at Fibonacci levels here, we can see that that we've dipped down and almost crossed that 23% fib, and then we've come back up to a double top. And now I think this is our good opportunity and chance to short against this double top and target number one, our 23% fib, which is about 159.00, 159.10, and look for a break of that level and target at least 157.00, which is the 38% fib and also the 200 moving average. I think there's a 400 pip potential movement to the downside coming on the pound dollar, barring any major surprises on the FOMC meeting on Wednesday. Okay, so I've been talking a whole bunch. But that's what I'm looking for on the pound dollar, and I think that is going to be a fantastic little opportunity here. We've had some again, this double top here, and you saw that we had this rising trend line right there that we've broken fairly recently. Now again, we do have an inverted hammer right here, which can be a little bit of a bullish sign. So let's be careful selling into this downward movement just yet. What I would like to see ultimately on the pound dollar, and I don't see any super fantastic, really short-term trades on the pound dollar just yet. We've got some descending trend lines and so on there, and we've been kind of bouncing around the 200 moving average. A couple of things to remember is that we had a missed weekly pivot. We've got some missed weekly pivots on the pound dollar all the way back here at 158.65, down here as well at 156.00. So we've got some pretty good, pretty fantastic missed weekly pivots on this pound dollar that are going to put some pressure to the downside for sure. And this double top is starting to look pretty serious, and so I think we're gonna have some nice opportunities to sell. So in the short term, once again, I think we need to see, we need to watch some of the shorter term time frames, look for some of these little breakouts and little things to happen. But I think we're going to be looking more in the lines of getting a little more retracement and selling against this 162.50. That's what I'm looking to do, is short against 162.50. And if we look at the missed, we should have a missed daily pivot today. 161.57 is today's daily pivot, and that's going to put us all the way up about here. That'll get us about 20 some pips higher. So let's look and see if this 200 moving average on the 1 hour chart is going to hold, and we're going to be able to get a little bit of a spike up and a move to that upside there, and then start shorting against these highs. Again, we have to take into account the FOMC meeting coming Wednesday, which could always shake things up. The Gov is the biggest business in town, so that's going to be the big thing to look for. So again, on short term, nothing super exciting for the next several hours on the pound dollar, except for some retracement, some upside movement. Again, you can look at some of these really short time frames and see that maybe there's some little trend lines that we can break, trade the break of. This has kind of tried to break out just a little bit, and it's really hopping around and not doing anything too terribly exciting. So I'm not really, euro dollar and pound dollar. Euro dollar has a few more short term, more immediate trades that we could be taking. Pound dollar is pretty choppy, but remember, the chop happens when trends are reversing, and I think this trend is reversing, and it's getting real choppy and has been for several days against this double top area. So the big trade is yet to come on the pound dollar, but I think it is coming. So any questions, guys? Any questions, comments? Pound dollar, and feel free, by the way, to type in any pairs that you're watching, just to make sure that I mention them. Okay, so this was the trade from yesterday. Okay, I'll bring up the dollar Swiss franc for sure. This was a trade from yesterday. This is the Aussie dollar. And I posted this in the notes area, just the screenshot. And actually, anybody that watches me on Twitter can see that I posted that on TradingView as well. Just this little channel right here, and looking for a break of either side. And you can see it, the Aussie dollar broke the channel by 15 pips, pulled back 15 pips, consolidated, and then finally has made a run of 40 pips so far from the breakout of this channel. So Aussie dollar, has broken out of that little area pretty nicely, and the question is, where might this thing continue? What is probably the next movement on this Aussie dollar? As far as long-term things go, the Aussie dollar is starting to cross the 23% fib on the daily chart. Now that is pretty significant. Anytime we cross the 23% fib, we start getting really curious about double tops and double bottoms, and we start getting really curious about big reversals. And the Aussie dollar has double bottomed back here in August and has run up a whole bunch. I mean, you know, a bit, 800 pips. And now we've got this double kind of this topping out, bottoming out area right here around 95.50, and you can see we're just below that. It's 200 moving average. We're breaking out of this decent sized channel. We've got a breakout in the works, and that breakout was confirmed by the break below this low here of Thursday and Friday of last week. So we broke that Thursday and Friday low, and then, you know, again, it's 30 or 40 pips below that now. So that was our Aussie trade. Now, as far as this thing goes coming up, we still have some missed weekly pivots on the Aussie dollar. We've got this guy back here. We still have a gap that's not totally filled that goes back over a month, and then we have a missed weekly pivot that's back here around 91.35 that still puts us 400 plus pips away. So the Aussie, all these pairs, euro dollar, pound dollar, Aussie dollar pairs, are all starting to look like there might be some bigger reversals in the works, and I think there just might be. So again, on the big picture, there's nothing too terribly exciting to see on the big picture here, but on the shorter term time frames, daily, 4-hour, 1-hour charts, I think we're gonna be looking for some nice opportunities to buy the dip on the short term, but really we're looking to sell the rally. We're getting a nice little breakout. So what I'm looking for again on kind of this shorter term movement is I'm looking for probably a break of this descending trend line, a test of this weekly pivot right here, and I want to get this Aussie back up there just a little bit. And I'm leaning much more towards shorting against the highs up here. I think it might be a good opportunity to short these against these highs, which are now, you know, definitely a few pips away, 200 pips away. But if we can get a bit of a rally, especially with the FOMC news, I think that's going to be a great opportunity. As far as some of the short-term trades, again, nothing super exciting just yet. There will be some opportunities to buy the dips and so on, but nothing crazy exciting on this Aussie dollar just yet. So our trade from last night / yesterday is in action, and the movement downward is in the works. But other than that, we're going to be waiting just a little bit and seeing if we can get this down there a little further. Aussie yen, pretty choppy. Nothing too much to report on the Aussie yen. It's coming down to the bottom of this ascending channel, and it looks like it wants to break, and it may be able to break. So let's keep an eye on this. I'm not super into anything on this one just yet, but I think the Aussie yen could have a little bit of movement to the downside. We have a missed weekly pivot back here 2 weeks ago, which is currently 65 pips away. Nothing too major, but just keep in mind that 92.55 area is probably going to get hit sooner than later on the Aussie yen. So just keep that in mind. Pound yen. We've had news. So speaking of all the yen pairs, out of the Bank of Japan saying that Japan will continue buying bonds and doing their version of QE as well for as long as they need, which should cause some more yen weakness, which should cause the Aussie yen ultimately and pound yen and euro yen to run up. But we have kind of an interesting pattern on this pound yen, which is, at least on the 1-hour chart, we can see very nicely that we've got a very, very nice bear flag here. Straight run down and then some consolidation up. So if we break this trend line, let's watch this trend line and let's watch for a break of 150. It's basically breaking 157.50, which isn't super far away, which should be the break of this trend line right here, gets this pair moving potentially at least back into a double bottom. So look for a break of 157.50 on the pound yen and look to target that 158.80 area, 158.90, right in that general spot. I think we're going to at least get back, or excuse me, 156.80, not 158.80, but I think we've got at least a really good chance of reaching that 157.00 and even slightly below with the break of this 157.50. So just keep an eye on this bear flag on the 1-hour chart, pound yen. Euro yen gave us some pretty nice movements. I haven't done too much on the euro yen just yet. I really don't like this pair much. It did give us some pretty decent trades and some nice movements, which it was well overdue. But let's just kind of keep an eye on this thing. We've got some trend lines. We've got some things to watch. I'm not in anything just yet on this pair, but there are some things to keep an eye on. So let's just watch this wedge, see how this thing forms, and see if we get some breaks from the breakouts here. Keep in mind that our weekly high is only a couple of pips away, 30 pips away, 134.95. Let's watch for any breaks there, and let's be careful on the breaks to the downside. The euro yen has a lot more support on the downside than the pound yen or the Aussie yen, so I'd be much more cautious about shorting euro yen for any reason. There's some good opportunities on the pound yen and some decent ones on the Aussie yen, but the euro yen, I'd be more interested in trading the break of the upside, which is 134.95, 135.100 area. Okay, so that's euro yen. Gold making some moves. Dollar CAD. Finally, the dollar CAD finally on Friday reached our missed weekly pivot that we had all the way back here at a couple of weeks ago at 104.40 area, and you can see that it finally reached that spot, and in the process it's left a missed weekly pivot here. So I'm not ready to short the dollar CAD just yet, but I am keeping an eye on this missed pivot, and we might have just a quick little trade, a quick little opportunity to trade down to this area, and there's 40 pips to go there. The high is only 15, 16 pips away, so there might be a nice little trade in the works there, but nothing too much just yet. We're starting to see some nicer movements on like Euro Aussie, Euro New Zealand, Euro CAD. We've had a lot of chop on these guys lately, and then we've started to see last week we saw a nice little move up, and we're seeing that continuation at the upside. Remember that Euro Aussie has a missed weekly pivot back here, all the way back up at 148.35. Which is still 385 pips or so away from current market price. But in the process, remember, let's keep an eye on this missed weekly pivot right here and see if there's any breakouts, any reasons to start entering in this upside movement towards the weekly pivot of this week. So let's just keep an eye on that. Sure, yeah, we'll see if we can get into that New Zealand CAD. So we're just looking at that, but the euro's definitely on a bit of a move, so you can see that on some of these pairs. I like this. I like the Euro New Zealand. It's been choppy and crazy, but we still have some great levels. We just took out this missed weekly pivot. We've talked about this one quite a bit, 16600. Now we have another missed weekly pivot all the way back here at 170. Just above 170, 170.60 just about. So let's watch that. Again, we have to look for opportunities for this to possibly take a little bit of a dip, pull back, but I'm definitely looking to buy on the dips on Euro Aussie, Euro New Zealand, and Euro CAD, and we have a couple of pretty nearby missed weekly pivots just below current market price on both those pairs. Euro CAD, same thing. We've got just a nice little dip. So I think some of these other Euro pairs are going to be great opportunities to buy those dips. So that should be a good opportunity there. Pound CAD starting to come down just a little bit. Let's talk for a moment about the dollar Swiss franc. This one, we have the nice little missed weekly pivot from last week that's about 100 pips away, and I think that's going to start turning into an interesting opportunity. And I think that we're going to see some movement back in that direction. Remember, we've got a lot of missed weekly pivots on the euro dollar, and we've got a couple on this one as well. You can see that the dollar Swiss franc is bouncing off of this major support level. This is all the way back. This goes all the way back to our lows of 2012, and now we're kind of bouncing off of that major low right now. So we did get a little tiny bit below the low, but it's starting to come back up, and I think we're going to have some nice opportunities to buy those dips. So remember, be careful with Friday highs and Friday lows, which you can see right here, and there's a nice little double top there, and that's about 89.65. And then likewise, let's just watch for some of these guys as well. So we're seeing kind of a we're seeing kind of a little pattern here that's if we break this high, we may only get a few pips up there for now because the 200 moving average is kind of a nice little resistance level and so on. But we've also got a nice little ascending trend line to trade the breakup. So let's keep an eye on that and look and see if we can get any kind of extra bottoming out pattern on that dollar Swiss franc. So let's keep an eye on that. As far as some of these other pairs go, not trading the dollar yen too much, keeping an eye on New Zealand dollar. I think this one is in a bit of a delicate state here. We're coming back down into a lot of support. We could get a bounce, but we could also get a fantastic break. So I'll have more news on that one coming up. And then for a couple, let's see, someone was asking Radhika about New Zealand CAD. So this isn't a pair that I look at too much, but I will gladly run through it real quick and just see if there's any details that that I can shine some light on or answer questions about. Where is my New Zealand? Maybe I don't even have a New Zealand CAD here. I might not. Did I miss it? Let's see here. Euro CAD? I don't know. You know how oh, there it is. You know the pressure kind of gets on and you think, oh, am I missing something? Okay, so New Zealand CAD, just a quick look at the overview. Nice little uptrend in the works. Not a lot of data from previous there. I would just be watching missed weekly pivots if there are any, and I don't see... looks like we have a little one maybe back here a ways. And we're starting to see this kind of stuff in the works as well. So we're getting some breakouts starting to happen, and so that could definitely lead to some further downside there. It looks really choppy to me right now, and I don't like trading pairs that are too choppy looking over a couple of week period. And this one looks like most of last week, all of last week, and most of the week before, and some of this week it's been pretty choppy. So I'd be cautious about this one. I'd just be watching your major support and resistance levels. The weekly low last week is not super far from current market price, so there might be some stuff to watch for there. But it does look a little tiny bit on the messy side to me. For the moment, I'd be watching for some breakouts, maybe getting above the weekly high or below last week's low before trading anything on that one. Okay, guys, I'm going to post some notes and some details, questions, comments. Let me know. And then, again, I'll have more details coming as we go. Make sure to follow me on Twitter at DayTradersFX, and I am posting charts and ideas and situations and so on as often as I can. And I'll have as many updates coming there as possible, and I'll have more notes coming in the chat shortly. So we'll keep an eye on things, and thanks for joining us, everyone. Great to have you all with us.